Introducing what the rich know that they desperately wants to keep secret. Stay tuned and watch this video to the end and be financially free.
Pounds or naira. We've been using them for centuries. Isn't that safe enough?
That's a good question. But let me ask you this, have you ever noticed how prices keep going up?
Of course. Just last year, groceries cost less. And don't even get me started on rent. But that's just inflation, right? Normal.
Normal, yes. Fair? No. Inflation is like a hidden tax. Every year, your money buys less, not because you're lazy or earning less, but because the government keeps printing more.
But governments need to print money. That's how the system works.
Exactly. And that's the problem. Imagine this, you spend all year filling a bucket with water, your savings. But the bucket has a hole at the bottom. No matter how much you pour in, it leaks. That's fiat currency. That's dollars, pounds, naira.
So you're saying my money is leaking?
Yes. Slowly, silently, every day. Now compare that to Bitcoin. Only 21 million coins will ever exist. No government, no bank, no politician can print more. It's like a bucket with no holes.
But money needs to be printed to keep the economy moving, right?
That's what they want you to believe. But think about this, if you keep printing more of something, what happens to its value?
It drops. Like when too many people have the same product, the price goes down.
Exactly. That's why your salary feels smaller every year. Not because you're earning less, but because your money is worth less. Bitcoin was created to fix that.
So you're telling me Bitcoin is like digital gold?
Precisely. Gold has value because it's scarce, durable, and trusted for thousands of years. Bitcoin is the same, but digital, faster, and borderless.
Borderless?
Yes! I can send you Bitcoin in 10 minutes across the world without a bank, without permission. Try doing that with gold or cash.
Okay, that does sound powerful. But if it's so good, why isn't everyone using it already?
The same reason not everyone used the internet in the 90s. Back then, people said, why use email when I can send a letter, or why shop online when I can walk into a store? Those who laughed at the internet missed the biggest wealth shift of our time. Bitcoin is the internet of money. And most people are still laughing.
So, if I keep holding only cash, I'm basically holding a leaking bucket. And if I hold Bitcoin, I'm holding, what did you call it?
A bucket without holes.
Huh. That's starting to make sense. You know, my cousin told me the same thing you're saying. He said, Bitcoin is an asset. But I don't really get that. I thought assets were like houses, cars, or land. Isn't Bitcoin just risky code on the internet?
That's the mistake most people make. They confuse assets and liabilities. Let me break it down the way my mentor once told me. Assets put money in your pocket. Liabilities take money out of your pocket.
So my car is an asset, right?
Is it? Let's check. Does your car put money in your pocket every month? Or does it take money out?
Well, it takes money. Gas, repairs, insurance. Okay, fine, it takes money out.
Exactly. Most people think cars, houses, and fancy gadgets are assets, when really, they're liabilities. They drain your wallet, not fill it.
So what's a real asset then?
A real asset is something that grows in value or pays you regularly. Real estate that gives you rent is an asset. A business that earns income is an asset. Stocks that pay dividends are assets. And Bitcoin? That's a modern asset. It doesn't just sit there, it grows in value over time.
But Bitcoin doesn't pay me rent or dividends. How is it an asset then?
Let me give you an example. Imagine 5 years ago, you bought a $1,000 phone. Today, that phone is old, probably worthless. That's a liability. But if you had spent that same $1,000 on Bitcoin 5 years ago, today it would be worth tens of thousands. That's an asset.
Wait, really? That much?
Yes. Because Bitcoin is scarce, just like gold, but better, it can move, divide, and be stored digitally. Over time, scarcity drives value up. That's what makes it an asset.
So, if I buy Bitcoin today and hold it, I'm adding an asset to my pocket. But if I buy another new phone, I'm just adding a liability.
Now you're thinking like a rich dad. The poor spend money on liabilities that look good today but drain them tomorrow. The rich collect assets that may look boring today but make them wealthy tomorrow.
So the real question isn't is Bitcoin risky, but do I want more assets or more liabilities?
Exactly. Wealthy people know the difference. Poor people don't.
Okay, I think I'm beginning to understand. Bitcoin can be an asset. But here's what confuses me. Some people say, buy and hold forever. Others say, trade daily and make quick profits. Which one is it?
It's both, but they're two different games. One is called investing, the other is trading.
They sound the same to me. You buy, you sell. What's the difference?
Let's use an example. Imagine you buy a piece of land in a growing city. If you hold it for 10 years, the value increases because the city expands, more people move in, and demand rises. That's investing. Long term. You trust that value will grow with time.
Okay, I get that.
Now, imagine instead you buy a house, renovate it, and sell it quickly for a profit. Or you buy a property cheap and flip it when prices rise in a few months. That's trading. Short term. You take advantage of market movements.
Ah, so investing is slow, patient wealth. Trading is fast, active profit.
Exactly. Both can make you money. But they require different skills.
But doesn't trading sound more like gambling? I mean, guessing if the price will go up or down.
Only if you don't know what you're doing. Gambling is when you rely on luck. Trading is when you rely on strategy, analysis, and discipline. Think of it like driving a car. A reckless driver crashes. A skilled driver arrives safely.
So tell me how you use both.
For me, I invest in Bitcoin long term because I believe in its future. That's my foundation. But I also trade when I see opportunities, small swings in the market where I can buy low and sell high.
Isn't that stressful? Watching charts all day?
It can be, if you let it. But there are tools, strategies, and even automated systems that help. The key is discipline, never risk more than you can lose, and never let emotions control you.
So, which one should a beginner like me start with?
Always start with investing. Buy some Bitcoin, hold it, learn the system. Once you understand the basics, then explore trading. Too many people jump straight into trading, lose money, and quit. They tried to run before they could walk.
So investing builds wealth over time. Trading creates cash flow if you're skilled.
Exactly. Think of investing as planting a tree. You nurture it, and it grows strong over years. Trading is like harvesting fruits, quick gains, but you can't harvest if you never planted.
I like that. Plant the tree first, then enjoy the fruits.
That's the rich dad way.
Okay, I think I'm getting it. Investing builds wealth slowly. Trading can make money quickly if I know what I'm doing. But here's my problem. I still need monthly income. Rent, bills, food. How does Bitcoin help with that?
Ah, now you're asking the right question. You see, the poor and middle class work for salaries. They exchange time for money. But the rich? They build cash flow. Money that comes in regularly, whether they work or not.
Cash flow. That's like rent from tenants, right?
Exactly. In the old world, cash flow came from real estate or businesses. In the new world, crypto creates the same opportunities, except it runs 24/7 globally.
Wait, so you're saying Bitcoin pays me every month like a tenant?
Not directly. Bitcoin is like digital gold. You hold it and it grows. But in the wider crypto world, there are ways to earn income streams. Let me show you a few.
Go on.
First, there's staking. Some cryptocurrencies let you lock your coins and, in return, you earn interest, like a savings account, but higher.
Higher than the bank?
Much higher. Banks give you 1% if you're lucky. Some staking rewards give 5%, 10%, even more. Because instead of a bank lending your money, you're helping secure the blockchain itself.
Interesting. What else?
Second, there's lending. Just like banks lend money and charge interest, you can lend your crypto on platforms. Borrowers pay you interest, and you earn.
So I become the bank?
Exactly. In crypto, you don't beg the bank for scraps, you are the bank.
Wow. Okay, what's the third?
Third, there's yield farming and liquidity pools. This one's a bit advanced, but imagine this. People need marketplaces to trade crypto. If you provide your coins to the marketplace, you earn a share of the transaction fees. Like owning part of a digital stock exchange.
You mean I can earn fees every time people trade?
Yes! Every trade, you get a slice. It's like owning a toll booth on a busy highway. The more cars that pass, the more you earn.
That's insane. So while I'm sleeping, money is flowing in?
Exactly. That's why I call it money that works harder than you do.
But there must be risks, right?
Of course! With great rewards come risks. Some platforms can fail, some projects are scams, and prices can swing. That's why education and security are vital. You must choose wisely.
So the lesson is, don't just chase salaries. Build cash flow with crypto, so money comes in whether I'm working or not.
Exactly. When your income doesn't depend on your boss, you become financially free.
Alright, you've got my attention. Bitcoin is an asset, crypto for cash flow. I'm starting to see the big picture. But let me ask the obvious question. How do I even start?
Good. That's where most people freeze. They get inspired, but never take action because the tools sound confusing. But it's actually simple. Let me walk you through it step by step.
Go ahead. Pretend I'm 5 years old.
Perfect. Step 1. You need a wallet.
A wallet? Like the one in my pocket?
Exactly. But digital. A crypto wallet stores your Bitcoin. Now, there are two main types, hot wallets and cold wallets.
Hot? Cold? Sounds like coffee.
Think of it this way, a hot wallet is connected to the internet, like the wallet on your phone or an app. It's easy to use, but not the safest. A cold wallet is offline, like a USB stick for your Bitcoin. It's safer, because hackers can't touch it, but less convenient for quick trading.
So hot is easy. Cold is safe. Got it.
Step 2. You need an exchange. That's where you buy Bitcoin with your regular money. Think of it like a digital stock market, but for crypto.
Which exchange should I use?
There are many: Coinbase, Binance, Kraken, and so on. The key is, choose one that's reputable, has good security, and is easy for beginners.
Okay. But isn't it risky to leave money on the exchange?
You're catching on. Yes, very risky. Exchanges are like banks, convenient, but not truly safe. That's why serious investors say, not your keys, not your coins.
What does that mean?
When you keep your Bitcoin on an exchange, they control it. If they shut down or get hacked, you lose. But if you move your Bitcoin to your personal wallet, you control it. The private key, the password that unlocks your Bitcoin, belongs only to you. That's real ownership.
So exchanges are for buying. Wallets are for keeping.
Exactly. Step 3. Security. This is where most beginners mess up. They use weak passwords, leave coins on exchanges, or fall for scams.
What do I need to do?
Always use strong passwords, enable two-factor authentication, and never share your private keys. And if possible, use a cold wallet for your main savings. Treat it like a digital safe.
Sounds like I need to be my own bank.
That's the beauty of it. You're no longer trusting governments or banks. You are in charge. With responsibility comes freedom.
So, to summarize. 1. Get a wallet, hot for ease, cold for safety. 2. Use an exchange to buy Bitcoin. 3. Move it to my wallet. 4. Protect it with strong security.
Exactly. Those are your tools of the trade. Once you have them, you're ready to play in the new world of money.
You know what really scares me about Bitcoin? The price goes up, then it crashes. I've seen headlines. Bitcoin loses 30% overnight. That feels too risky for me.
That's not Bitcoin's problem. That's people's problem.
What do you mean?
Most people lose money in crypto not because of Bitcoin, but because of their emotions. They buy when they're greedy and sell when they're afraid.
Sounds like me with lottery tickets.
Exactly. Imagine this. When Bitcoin rises fast, everyone gets greedy. They say it'll never go down. Buy more. Then, when it drops, fear takes over. I'll lose everything. Sell now. That's how they lose.
Buy high, sell low. The opposite of what you should do.
Exactly. The rich understand that price swings are normal. They think in decades, not days. The poor panic at every bump.
So how do you stay calm when it's crashing?
2 words: discipline and strategy. One of the best strategies is dollar cost averaging.
Dollar, what?
Dollar cost averaging means you invest a fixed amount regularly, no matter the price. For example, $100 every month. Sometimes you buy high, sometimes low. But over time, your cost evens out, and you remove emotion from the process.
So instead of waiting for the perfect time, I just keep buying little by little.
Exactly. The poor wait for perfect timing and miss out. The rich keep planting seeds consistently, knowing the harvest will come.
That makes sense. But what about trading? Doesn't that depend on emotions too?
Yes, and that's why 90% of traders lose. They chase pumps, they panic in dips. Successful traders stick to rules, like soldiers in battle. No emotion, just discipline.
So Bitcoin isn't really about numbers, it's about psychology?
Exactly. Wealth is 80% mindset, 20% mechanics. Poor dads focus on the mechanics. What coin should I buy? What's the price today? Rich dads focus on the mindset. How do I control my emotions? How do I build a long-term plan?
So the real enemy isn't Bitcoin. It's my fear and greed.
Exactly. Conquer your emotions, and you'll conquer the market.
You know, I've heard too many horror stories. People losing everything. Some guy bought fake Bitcoin from a shady website. Others sent money to scammers promising to double it. That's why I stay away.
And that's smart, because there are traps. But avoiding Bitcoin altogether is like refusing to drive a car because there are accidents. The solution isn't fear. It's education.
So what are the biggest traps?
I'll give you the 3 big ones. 1. Scams and Ponzi schemes. 2. Hacks and fake exchanges. 3. Your own mistakes.
Tell me about the first one.
Scam artists love crypto because it's new and people don't understand it yet. They'll say, send me 1 Bitcoin and I'll send you 2 back. Or they promise crazy returns like 10% every week.
Too good to be true.
Exactly. Rule number 1, if someone guarantees you profit in crypto, it's a scam. Period.
Got it. And the second trap?
Fake exchanges and hacks. Imagine you put your money into an exchange that looks real but isn't. One day it disappears. Or a hacker drains it. That's why you only use trusted, regulated exchanges.
Okay, but even good exchanges get hacked, right?
Yes! That's why serious investors don't leave all their coins on exchanges. They move them to a wallet.
Like a wallet in your pocket?
Digital wallet. There are 2 types. 1. Hot wallets, online, convenient, but less secure. 2. Cold wallets, offline, like a USB device, very secure.
So the safest is cold storage?
Exactly. Keep long-term holdings in cold wallets. Trade only with what you need on exchanges.
And the third trap, my own mistakes?
Yes! This is the biggest one. People lose passwords. They send coins to the wrong address. Or they panic sell at the bottom. 1 click can cost you thousands.
That's scary.
It's scary because people rush in without learning. The rich dad approach is simple. Invest in your education before your money.
So knowledge is the best protection.
Exactly. Crypto is like fire. In the wrong hands, it burns. In the right hands, it cooks your meal and keeps you warm.
I get what you've been saying so far, investing, trading, security. But there's still one thing that worries me, the government. Can't they just ban Bitcoin? Or tax it so much that it's not worth it?
That's one of the most common fears. And it makes sense. Governments don't like losing control of money. But banning Bitcoin completely? That ship has sailed.
Why do you say that?
Because Bitcoin is decentralized. It's not like a company headquarters they can shut down. It's everywhere, on millions of computers across the globe. It's like trying to ban the internet. You can make it harder, but you can't kill it.
But I keep hearing about regulations. Some countries are strict. Others are friendly. Doesn't that create uncertainty?
It does. But uncertainty is opportunity. Remember, when America introduced income tax back in the day, people panicked. When regulations first touched the stock market, investors feared it would end trading. Instead, regulation made it safer and attracted big money.
So you think regulations will help Bitcoin?
Yes, in the long run. Right now, crypto is like the Wild West. Regulation will clean out scams and give big institutions confidence to invest billions.
Okay, but let's talk about taxes. How does the taxman treat Bitcoin?
That depends on your country. But here's the general rule. 1. If you buy and hold Bitcoin as an investment, when you sell it later for profit, it's treated like capital gains tax. 2. If you trade often, those profits can be taxed as income. 3. If you spend Bitcoin, like buying coffee, in some countries, that's a taxable event too.
That sounds complicated.
It is. But here's the rich dad mindset: don't fight taxes, learn to use the system. Smart investors keep records, track trades, and sometimes even move to tax-friendly countries.
Like which ones?
Portugal, Dubai, Singapore, El Salvador, places that want to attract crypto wealth. They lower or remove crypto taxes to bring in talent and capital.
So people actually relocate because of Bitcoin taxes?
The wealthy always go where they're treated best. That's why you see digital nomads living in Bali or Lisbon, earning online and paying little to no tax. Bitcoin just accelerated that trend.
But what about the future? 10 years from now, where do you see Bitcoin?
10 years from now, Bitcoin will be more mainstream than ever. Governments will regulate it, banks will adopt it, and ordinary people will use it without even realizing. Just like the internet, at first, strange and risky. Now, we can't live without it.
So you're saying, instead of fearing governments, I should learn the rules and play smart.
Exactly. Rich Dad always said, don't complain about the rules. Study the rules. Then use them to win. Bitcoin investors who understand taxes and regulations will thrive. Those who don't will keep making excuses.
Okay, I get Bitcoin now, digital gold, decentralized, a hedge against inflation. But is Bitcoin the end of the story? Or just the beginning?
Just the beginning. Bitcoin opened the door, but the future of money goes far beyond it.
Beyond Bitcoin? How?
Think about it. Bitcoin solved one problem: money you can't print or censor. But blockchain, the technology behind it, can do so much more.
Like what?
Imagine a financial system without banks. Lending, borrowing, trading, all peer-to-peer, run by smart contracts on the blockchain. That's DeFi, decentralized finance.
So you're telling me people are already borrowing money without banks?
Exactly. Billions of dollars flow through DeFi every day. No middleman, no banker deciding yes or no. Just code.
Sounds risky.
It is, just like the early internet. But remember, every innovation looks risky at first. The internet was once just chat rooms and cat memes. Now it's trillion-dollar companies running our lives.
So what else is beyond Bitcoin?
1. Stablecoins, digital dollars backed one-to-one with real money. They're already being used for payments worldwide, especially where banking is weak. 2. CBDCs, central bank digital currencies. Governments are testing their own digital money. Imagine the dollar or euro as pure code. 3. Tokenization, everything of value, from real estate to art, being turned into digital tokens you can trade 24/7. 4. The metaverse economy, virtual land, digital goods, and services, all powered by blockchain.
Wait, so money itself is changing?
Completely. The old system was built on paper, banks, and borders. The new system is built on code, networks, and global access.
And where does Bitcoin fit into this new system?
Bitcoin will be the backbone, the digital gold everyone trusts. But around it, new forms of money and finance will grow. Think of Bitcoin as the foundation stone, and everything else as the skyscrapers built on top.
So basically, the future bank is my smartphone?
Exactly. Your phone is already your bank. Soon, it might also be your stockbroker, your mortgage lender, and your global wallet, all without middlemen.
Wow. That's bigger than just Bitcoin. That's the reinvention of money itself.
And just like the internet, most people won't see it until it's everywhere. By then, the biggest opportunities will already be gone.
You know, after all these talks, I get it now. Bitcoin, crypto, DeFi, the future of money. But here's my question. What do I actually do?
That's the right question. Knowledge without action is just theory. The goal isn't just to understand money, it's to take control of it.
Oh, where do I start?
Step 1. Mindset. Stop thinking of yourself as just a consumer of money. Start thinking like an owner. Like a bank. Because that's what Bitcoin and crypto let you become, your own bank.
Okay, mindset first. What's next?
Step 2. Security. Get a wallet you control. Not just an exchange account. A wallet where you hold the keys. Remember, not your keys, not your coins.
Right. Self-custody.
Exactly. Step 3. Start small, but start. Buy a little Bitcoin. Not because you'll get rich overnight, but because it changes the way you think about money.
So the act of owning Bitcoin rewires your brain?
Completely. Once you hold it, you start seeing the flaws of the old system. You start asking why banks take 3 days to send money when crypto does it in minutes.
I can already feel that shift happening.
Step 4. Educate yourself daily. Read, listen, watch. The space changes fast. The winners aren't the ones who gamble. They're the ones who learn and adapt.
Got it. And step 5?
Play the long game. Don't chase every coin or hype. Focus on assets and tools that last. Bitcoin. Maybe Ethereum. Solid projects with real use. Think years, not weeks.
So it's not about getting rich quick. It's about building wealth slow and smart.
Exactly. Build cash flow. Stack assets. Protect your wealth. That's what banks do, and now you can do it yourself.
So when you say be your own bank, you mean take control, think long-term, protect your future?
Yes. That's financial freedom. Not waiting for permission. Not begging for loans. Not worrying if the system collapses. Because you've built your own.
Wow! So the real revolution isn't just Bitcoin or blockchain. It's the mindset shift that I am in charge of my money.
Exactly. The future doesn't belong to those who wait. It belongs to those who act.
Please subscribe to our channel for more information of what the rich knows and desperately wants to keep secret.